Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company which is coming to the markets next week is Juniper Hotels. It's a company that runs Hyatt affiliated hotels in India. The price band for the company is 342 to 360 rupees per share. It's opening on Feb 21st and closes on Feb 23rd. It's a fresh issue of 1800 crores and the market value is really nearly 8,010 crores at the upper end of the price band. And joining me today is Arun Kumar Saraf, who is the chairman and managing director of the company, and Variun Saraf, who is the CEO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Let me begin with you, Mr. Arun Saraf. If you can take us through, you're raising 1800 crores from the markets. How are you going to utilize your proceeds?
Thank you, Sajeet ji, for having us on your show. We are raising 1,800 crore rupees from the market, and out of this, we have earmarked that 1,500 crore rupees would be used to pay down debt that we have on our books, and 300 crore rupees will be retained for general corporate purposes.
Okay, give me a sense of the business that you run. You have seven hotels and residences which you run. How big are they, and operationally, how are they doing?
Sure. Juniper Hotel is a unique platform. We are owners of large and mixed-use developments all over the country, and our concentration is in larger cities and tier 1 cities and metro cities. If you look at our assets, they are number 1, number 2 in their marketplace, and with Hyatt affiliation, they are branded Grand Hyatt or Hyatt Regency and the new luxury brand Andaz. So kind of our spacing and our business model is that we like to develop hotels which are really very, very large in size. 2 of our hotels would feature in largest top 5, top 6 hotels in the country. The Grand Hyatt Mumbai, when it was built, was a single largest hotel and continues to enjoy this position. We are almost like 1.1 million square feet in Mumbai and about the same size in New Delhi. And our other hotels in Ahmedabad is largest hotel in Ahmedabad, 270 rooms. In Lucknow also, we are the largest hotel. Raipur and Hampi also, we continue to be the largest and important player segment in our segments in all the markets that we are. Our business is to develop and own the properties.
Okay. Varun, give me a sense of the expansion plans that you're looking at. You have nearly 1836 keys. And how do you plan to expand this across other cities or geographies?
Sure. So we have a plan to expand through organic and inorganic means. The inorganic means is we will be going through, so the family has other assets outside the Juniper portfolio. Through a ROFO arrangement, we have committed that we will be bringing those assets into the company as well. This would be done at arm's length through shareholder approval, of course. In terms of the organic growth, we have an opportunity to add 300 rooms on Grand Hyatt Mumbai itself. This would be at a relatively low cost. It would cost us about 80 to 85 lakh rupees per key and would generate us substantial amounts of revenue. Furthermore, we have plans to add additional banqueting facilities at Delhi and Bombay. So it's a combination of organic growth as well as inorganic growth that we see going forward.
Mr. Arun Saraf, you just spoke about the fact that you have other properties which is under the Saraf group. Can you give us the details of how big or how many properties are those? How many keys are there or rooms are there for those properties? And if and when you're going to bring it into Juniper, is there a timeline for that?
Yes. First of all, Juniper Hotels Limited will become our main platform for future growth and ownership of hospitality assets in our country. So all the Saraf, Varun and I both are committed to bring all the assets that we would have outside this platform, which is a joint venture between Hyatt and us. Outside this platform will be brought into this platform through regulatory process and approvals of NCLT, SEBI, and whatever various approval processes that would have to go through. So this would, as per our own commitment, we would try to bring them ASAP, but the regulator and other consideration, I think it will take us about 9 months to anywhere between 9 to 15 months to bring these assets into this company. And they are also sitting in a listed company outside this platform, and I would be able to share only that much, that these assets are also very, very large and very leading assets in their own market, and they are managed by Hyatt.
If I'm not wrong, is it these assets are housed in Asian hotels, right?
Yes, Asian Hotel East.
So
Asian Hotel East, which is also we are the promoters there, and which owns the Hyatt Regency Chennai and Hyatt Regency Kolkata. One of these properties will move into this platform.
So you're going to do an acquisition or a merger of Asian hotels with Juniper at some point in time?
Yes, this will be a merger of two listed companies.
So the two properties will
into the same platform, and where this will be non-cash.
So this to get
one of the two properties, the Hyatt Regency.
Yeah, please go on.
Yes. Let me clarify this. Hyatt Regency, yes, Hyatt Regency, either Hyatt Regency Kolkata or Chennai will merge into this company through the proper process, regulatory approval process. And subsequently also we have now stepped into some other asset which is also owned and managed by Hyatt, which will also, once acquired, will move into Juniper platform.
Okay.
So these two are the properties that will come, which is more likely that Hyatt Regency Mumbai and Hyatt Regency Chennai will likely to move into this platform.
So only one of them will come. What happens to the other one? It will stay with Asian Hotels East?
Yeah, this will go to my brother's portfolio of hotels.
Okay. And when you say that there are certain other assets which are there of Hyatt which may also come into Juniper Hotels, can you give us some idea of how big those assets are, or how many rooms are there as and when that assets come into Juniper?
Yes, you would have about 275 rooms, 250 room property that is in Kolkata, and 330 rooms in Chennai. One of these properties will come into the platform. And another property that is sitting outside these platforms is recently we have been able to muster up a deal of Hyatt Regency Mumbai. That's about 400 room hotel that also will move into Juniper platform as and when regulators and all the processes will be completed.
Okay, so it's in other words, sir, correct me if I'm wrong. You're raising this IPO to to not only deleverage your balance sheet, which is there, but also you're saying that there would be a corporate M&A which will take place over the next 9 to 12 months, which will lead to inorganic addition of properties into Juniper going forward.
Yes, let me clarify. The money raised in the IPO is going to come to the company where we are deleveraging, but these new acquisition by way of merger will not be requiring these funds of the IPO money right away. Merger will happen at the property level, which will be non-cash, and the Mumbai acquisition, which would be a cash-based acquisition, that will require certain amount of funds, and out of the 1,500 crore rupees that is deleveraging, that is also growth money. Let me explain to you how our model is at this moment. 1,800 crore rupees is being raised, 1,500 crore rupees is being used to deleverage the company at this moment, but as and when 300 crore rupees is being kept for general purpose use. As and when company requires the funds, we will leverage to a certain extent, but never more than 2 multiple of our EBITDA. And with that discipline, we shall be going forward into the market looking for new acquisition opportunities or even greenfield opportunities. Company has enough cash flow being generated to meet all its obligations at presently, and even the renovations and other things that are going on in the company as we speak now will continue from the internal generations.
Varun, can you come in here on the EBITDA growth that is there? Because I've been looking at your numbers for FY23 and first half of FY24. EBITDA was around EBITDA percentage was around 40.8% on core EBITDA, and that has followed by a nearly 400 basis points for the first half of the year. So, do you expect the second half of the year to compensate for that fall?
Oh, absolutely. The first half traditionally in our industry is always weak. I think coming out of that, we have already seen the December quarter end. The numbers have been very, very positive. Business is actually back. Rates are even higher than what they were, not only in the previous year, but also in the second half of the year. We do see the rates going up. So FY23, we closed at about 43 to 44%, and I believe even going forward, those will be that would be the threshold. And we do believe, given the more efficiencies that we are bringing in, the profitability will be on a higher trajectory.
And the profitability part of it, because currently you are loss making, and as and when you pay up the entire debt, which is non-current and current both, do you expect that interest savings that is coming in to flow directly to the profitability?
Absolutely. So once we pay the 1,500 crore rupees of debt in FY25 first quarter itself, immediately post the listing, we do believe that our numbers, we would turn positive, and quite substantially. Currently, our debt and debt service is about 220 crore rupees. Post payment, it would go down substantially to almost 40 crore rupees. So that would be 180 crore rupees that would flow through to the bottom line. Q1 FY25, we would definitely be profit positive.
Okay, but how do you manage the acquisitions or mergers that is going to come in the next 12 to 18 months? Because you said it's going to be non-cash, so it will be entirely done through equity issuances. And can you, Mr. Arun Saraf, can you just give us an understanding of how Hyatt plays a role in this, because they are the only, I think in India they have invested in your company and they have an equal partnership which is there with your company, or in the holding company basically. So how does they play a role in this entire thing?
Sure. Let me start on this Hyatt perspective. Hyatt presently and Sarafs presently own 50% each of the Juniper hotels. Going forward, after the new IPO, the Hyatt and the Sarafs will come down to about 38% each, and the general public new IPO money would be bringing in about 22% of the equity. So remaining 78% would be split between our two promoters, existing promoters. None of the promoters are selling any of their existing shares, so that there's no OFS in the market. All the money that is being raised is going to be used for future growth of the company. And Hyatt is actually, if you understand Hyatt, Hyatt is a management company listed on New York Stock Exchange. It's a very large global operator. And very rarely do they invest in any of their hospitality assets overseas. So this is a very, very unique relationship that Juniper has been able to inculcate with Hyatt. And Hyatt's investment into this company gives a lot of confidence to me as a partner, and I would expect that all the new shareholders will also take a lot of comfort, where Hyatt, being our operator, also has a major skin in the game, as you may use the word. And that is actually unique, because Hyatt or most of the other global companies do not traditionally invest in any of their assets. Their business model is of a service provider to the hotel owners. So we, as Juniper level, we are owners of marquee assets in major metros and tier 1 cities. So being that way, Hyatt brings in a lot of comfort to all the other shareholders, because being an operator and also investor, it leads us to having a sense that we are actually truly in a very, very unique situation here. None of the other operators have invested, and neither has Hyatt invested with any of the other owners in India, or even if I say in Asia.
You know, I just also wanted to understand that, you know, in the next 18 to 24 months, there are a couple of things coming into play. One, the organic expansion that has been planned across some of your properties, and the second thing is the inorganic addition of some of the properties in which Hyatt is already there. As and when that happens, does the stake of Hyatt remains equal with the promoters, or does it change in any fashion?
Okay, if our existing other listed companies and other corporate bodies will merge into this platform, obviously Hyatt shareholding and existing shareholdings would get adjusted to that new equity coming in. And since Hyatt is not our partner in any of the newer assets that we are intending to bring into this platform, obviously the Hyatt would, in terms of their shareholding, will decline, but this is something that is very well understood by Hyatt and all the existing shareholders of Juniper, that upon merger, the ratios between Hyatt and Saraf's may not remain the same.
You know, that's a great clarification that you made. Give me also the sense that in next 3 years, and I wanted to, you know, between organic and inorganic, how many keys would be added to the portfolio?
So on the organic side, we would be adding about 306 odd keys, and on the inorganic side, we assume that it's about 710 odd keys that we're going to be adding to the portfolio.
Okay, so
over the next 36 months.
Yeah, over the next 36 months. So we have a clear path to it. Yeah.
So basically, your expansion would be more of 50%, more than 50% in the next 3 years. How do you see the hotel business, Mr. Saraf? Because we have seen that, you know, the growth has been much higher, but the newer rooms or newer inventory is much slower to build up into this industry. So do you see pricing power coming back to hoteliers going forward? There is, you know, when we talk to other peers of yours, they are talking about major expansions because it's not keeping pace with the growth which is coming in.
Absolutely, I would say that you see, historically, industry has grown in demand in our hospitality sector, especially in luxury and upper upscale sector, for more than 10% year on year since last 15 to 18 years. And supply has come in patches, if I may explain to you by patches. So if you look at from 2011 to 2017, in those 6 years, in most of the cities, including, any of the cities that we took, including Bombay, Delhi, we have seen that there has been more than doubling of the supply of the hotel rooms in these markets. Some cities have even seen quadrupulation of their supply. So this supply that was planned in late 2008 and to 11 has been built and has come into the market. Now, since 2018-19, not much new projects have been launched in this hospitality sector. We do see quite a few in the budget and other segments, but in upper upscale and luxury segment, I don't see any significant supply coming into the market. And since it takes about 4 to 5 years to develop a new property, so even if new projects are being launched now, they would not be hitting into the market for anything near before 4 years. So you have a very, very strong, the demand is already is growing, and demand has been growing for last 15, 18 years at 10%. And with no supply coming in, I do see that there is going to be a significant firming up of the average room rates. And fortunately, the customer also is actually braced upon it, and they are already willing to pay. If you look at the leisure segment, the rates have already crossed 20,000 in upper upscale and luxury segment of hotels. So the same customer is our customer in big cities. So I do see that there is going to be a very, very healthy growth in average room rates across hotel industry and across the markets.
I just need one more clarification. CHPL, a company that you acquired in September of 2023, they also have land parcels in Trivandrum and in Guwahati. Do you plan to have inorganic construction and development of those plots into hotels going forward in the next 3 to 5 years?
Sure. So we have 2 land parcels in the chartered hotels. One is in Guwahati. It's a 2.5-acre site located in the center of the city. We actually have an agreement to build it as a Hyatt Regency Guwahati, but we will have to reevaluate the plans given the fact that this project was envisaged almost 8-9 years ago. We will go and reevaluate, and if the market conditions still justify it, we would go ahead and build that. The property in Trivandrum is a much smaller asset. We will probably not be developing that asset given the fact that it doesn't fit our business model going forward. We want to focus on large-scale developments in the upper upscale and the luxury segment. Having said that, in Juniper Hotels, we have another land bank actually sitting right next to Grand Hyatt Bombay. It's a 2.5-acre site, which will allow us to build about 3 lakh square feet of constructible area. That project will be realized in the future and probably give a substantial amount of growth to the company as well.
And that will be entirely done through internal accruals?
So it would be a combination. So going forward, once the repayment is done, we would have sufficient internal cash flow to allow us for internal accruals. But as and when required, we would be able to re-lever up. Post repayment, our EBITDA to debt would be less than 1. Our threshold is about 2 to 2.25, and that's the range we would be at. So we have substantial headroom available in case the internal accruals are not sufficient to take further debt to develop these assets.
Gentlemen, it was a pleasure talking to you today on NDTV Profit. Your IPO is opening on 21st of February and closes on 23rd, price between 342 to 360. That values the company at 8,010 crores at the upper end of the price band. Thank you for joining us on IPO Adda.